There was a giant made by men, not from flesh and bone, but bricks and mortar, paper and ink. Men made the giant, but their creation outgrew them. It stomped and flailed, lumbered and thrashed. Its eyes couldn't see. Its heart couldn't beat. It was too big to fail, and too big to succeed. This is the beginning of a bankless world. Don't bank. SOFI.
What you were just watching was a commercial from SOFI during the Super Bowl of 2016, whereby SOFI was introducing themselves to the wider audience as not just your regular traditional bank. And in this episode, I'm going to talk to you more about what SOFI is, why it's relevant potentially for beginning investors, and give you some arguments why it may become part of your portfolio in the near future. I want to be open. This is a position whereby I'm already having shares in SOFI, and I also had that in the past. And I've made already some really healthy profits with this company when it jumped the share price from 6-7 to around about 17-18. Nonetheless, I believe with the recent correction, I believe that SOFI can be a very interesting company for investors to take a small position in and to see that growth potentially double in the next 1 or 2 years. I'll explain about why I think that's really the case. So SOFI is a one-stop shop for financial services. This is how they brand themselves. Once you're hooked into the system, you are very tempted to use many of their other services that they offer. They do lending for personal loans, student loans, home loans, but they also have financial services whereby SOFI Money, SOFI Invest, SOFI Credit Card, SOFI Protect, and a lot of other services being offered. So once you're in their platform, it's very easy to actually get another service and add them on top. That on top of their very attractive pricing and having a very modern platform is very attractive for the younger generation, whereby everything nowadays is happening on your phone or your tablet or easily done on any of your digital devices. On top of that, you have a technology platform which is rather interesting for a bank. A bank normally does their banking services, but this company has basically bought over time a number of tech companies for further sophisticating their platform, building a banking platform that is up to the latest date with the latest standards and also very sophisticated. And this is something that makes SOFI very special. Let's go into some numbers. If you see the member growth over the last 4 or 5 years, the member growth has grown to 10 million plus. And they expect even more in the following year to further grow. If we look at the products that they have sold to their clients, this has been grown over the last 5 years between 2,500 to close to 15,000 products that they have sold. That means that every time there's a loan being offered to a client, there might be also an insurance sold or a credit card sold to that client. And it's very attractive and sticky for clients to stay there. Another thing is the tech platform. Their tech platform is something that once you're sold that to a company, it's very difficult to just suddenly change that, of course. And if you have a very solid and successful tech platform, well, that's super interesting to sell that next to being a bank. So this is a tech company as well as a banking company. And this is where you can see that over the last 5 years, they were able to sell their platform to 168 different clients. And what we're waiting for is one of the big banks of America to suddenly move over to their platform. And this would really spike up the price tremendously. If we look at the financial performance, they had a very strong growth in the last 4 or 5 years. Where by 2024 they had 2,606 million adjusted revenue, and whereby their EBITDA was around 666, and this is something that has been growing tremendously if you look at the year-on-year growth of these numbers. If we look at the adjusted EPS, the earnings per share, you can see that for the first year in 2024, they run a 4-quarter performance whereby they were making money every quarter. And this is something whereby when that started to happen, the stock price further went up. And the expectation is that this earnings per share is further going to grow in the following years. If you look at the guidance for 2025, you can see that the numbers are further growing with between a low and a high expected guidance of 23 to 26% for the revenue. And if we look at the EPS growth, it almost looks like it's going to double in the next following year. They believe even that another 2.8 million of new clients will be added in the following year. All in all, very strong numbers in my eyes. So SOFI has been seen by the market as a very successful new bank. They have a state-of-the-art platform and they have been racking up a number of rewards from money rates to investor.com to Motley Fool, Nerd Wallet. They have been ranked for numerous times now as one of the best banks in the US. Another thing that is interesting for them to do their marketing is that they became the official bank of the NBA, the basketball league of the United States. Another thing that is really big is that recently they started their golf center TGL, whereby they built an enormous golf center in-house, indoor, whereby they let the best golf players of the United States play against each other. And you will see SOFI everywhere in the stadium. Another interesting thing is that they actually have a stadium. You have an NBA stadium with SOFI marketing everywhere. That same stadium will likely be used for the Los Angeles Olympics in 2028, whereby they're going to host the swimming cups. And this is something that will be huge to have a look into that. Another interesting thing that I think is worth mentioning is that they have a very well-known CEO. The CEO has been in the past working for some really big banks and has been really successful already in the last couple of years. And the CEO has a particular reward package which is worth mentioning, as has been rumored into the market. Apparently, if the share price will hit certain targets of 25, 35, 45 in the next 1 or 2 years, the CEO and his management team will gain massive rewards in that. As you can see here in the text, is that they will gain around 6 million shares if it hits these kind of levels of share price. So that means that the top management is extremely eager and incentivized to get this share price off the ground. That means that you as a shareholder as well, you're not the only one that wants to see that share price going up. So what you can see here is the last 12 months of trade vision and SOFI stock price movements. And what you can see is that in the last summer, mainly it was moving between $6 and $7. And then suddenly in October, November, it started to really hike up to around $15, $16, $17, and even $18. This is where I already took some profit. And this is where I believe at a certain moment it should soon go back to these kind of levels. If it was not the case that recently we were going into a correction, and this is where the whole stock market, including SOFI, took a nosedive downwards. And this is where you currently can buy SOFI with a discount of approximately 30%. Currently, it's moving between $11 and $12. And this is, in my eyes, very attractive to step in, to take a small position and to see how SOFI is further going to grow in the next coming 1 or 2 years. And this is where I strongly believe that it can be a real interesting share to double your money in the next year, especially after having seen all the latest arguments. In this last part of the video, I'll be summarizing my arguments, why you should become a shareholder of SOFI or not. First point, very strong CEO. Anthony Noto has a very good track record, and the last couple of years have been very, very positive in terms of what the company has been going through. On top of that, the whole senior management is well incentivized to perform. So you as a shareholder, you have the same interest as their top management. Next is the AWS of fintechs. This is how Noto is calling it. SOFI is not just a bank, it's also a tech platform, and they are benefiting from having all the latest technical features integrated into their banking platform. On top of that, they have a wide offering of products. Once a client is hooked on, another product can be offered to the same client with minimal effort. The company is an award-winning bank. In the last couple of years, they have been racking up the number of awards over the years. All in all, they're growing their numbers of clients. They have more than 10 million already. This year, they're expecting another 2.8 on top of that. Big capital funds and investment funds are knocking on the door. They are basically handing over a huge amount of money to lend out as part of their origination of loans. And this is very attractive for SOFI as part of their business offering. They have a very sophisticated platform and they're outperforming their traditional competitors. And this is, of course, eating away competition. And last, they have a very strong marketing campaign. They initiated that in 2024. They became the NBA banking partner. They did a huge golf events. They have this stadium. They're in the news, and you cannot avoid them, especially in the US. My concerns is that the market does not seem to value this company as a fintech, but as a traditional bank. And this is something that holds the share price back as well. One of the other things is that market makers seem to shorten SOFI significantly with a lot of options. And this is causing irrational behavior in the share price. And this is something that, sometimes you expect growth and you expect the share price to go up. But then due to these kind of influences, the share price is not moving in the direction that you would expect. The next point is that they are very sensitive for interest rates. They are, of course, this is part of their big business whereby they're doing loans. And when the interest rates are lower, this is more attractive for SOFI. And we're hoping really that Mr. Powell in the next coming months or next quarters will come up with another interest rate cuts. And this would really help the share price of SOFI. A last negative concern is basically you are exposed to the US market and the US currency. So if you have your income in Swiss francs or euros or in British pounds, then obviously if the US dollar is getting weaker and you have a significant position or a position in SOFI, then you're basically losing money because of the currency FX difference. And this is something that you may want to consider, but this is something that you should take into account. Lately, the US dollar is becoming weaker. That means that I'm seeing a bit of a currency FX loss already on my current position. So in summary, do I think it's attractive? Yes, I think it's really attractive share to hold, especially with the prospect that this share price will hit the 25 by the end of this year or next year. That means a doubling of your current share price, and that's why I think it's very attractive. Obviously, you need to do your own due diligence. I'm not a financial advisor, and this is something that is just an interesting perspective from my side. I hope you find this interesting, and I hope to see you on the next video. Okay, take care, bye-bye.